Okay, very good morning. Tuesday, 30th of January. Hope you are well. And just quickly giving you an overview of what we're going to cover today. Quick look at some inflation figures already coming out of Germany, which has had a market impact on asset prices already this morning, as you can see on my charts I'll show you shortly. Then we're going to have a look at some of the news, a little bit update on Brexit, a look ahead on the day. We've got the State of Union address coming from Trump, so what are we expecting from his speech? And then I'll hand you over to Sam and he'll look at some of the levels to look out for in today's session. So that's what's on the agenda. Starting off then with the charts, and first thing I want to do is bring up the Bund chart, because you can see here these are minute candlesticks and we've had quite a powerful move to the upside at 8 AM. So right at the release of the first of the German state CPIs, this being the region of Saxony, where it came in weaker than expected, certainly a big reversal from the prior month. So the earlier regional data points to a slowdown in inflation in Germany for the month of January. Prices in the state of Saxony falling sharply and bringing the annual local inflation rate to its lowest level in more than a year. Average prices fell 0.8% over the month. And so obviously we've been so much in a hawkish mindset when it comes to European kind of news flow, from hawkish ECB comments, from a lack of dovishness from the press conference of Mario Draghi, to economic kind of uptick that we're seeing in global or European performance at least. And if I start putting this Bund chart on let's put it on a 240, you can see here we've had a persistent move lower pretty much ever since the year began. We've gone from trading around a 162 handle all the way down to where we are at the moment, and this actually brings into context some pretty interesting longer term levels. Just looking on a weekly, you can see here we had a test down at the March 17 low in the Bund just yesterday, but we've had a little bit of reprieve from that downtick, and as I said, Bunds have managed to make a bit of upside movement back towards finding some resistance at pivot this morning. In fitting with that, the DAX, which did gap lower overnight following the lower close in Wall Street and lower performance overnight in Asia, has recovered. So we filled the gap from the initial last candlestick kind of print before the Eurex close last night in the DAX future. And then the euro as well did see some weakness. We had a key down at a test down at a key support level down at S1, which also roughly matches up then with the low we had from yesterday afternoon. So bit of euro weakness, yields pulling back a bit and equities remaining bid, because obviously this inflation data does negate any hawkishness that may have crept into market prices of late, and a bit of reversal on those moves from certainly the first half of last week. Saxony, to give you a bit of an idea from these German state CPIs, Saxony as a CPI calculation is the fourth largest of the German states. Now I know this is slightly dated, but this same idea still applies. Saxony was the first state. I think actually we get a batch of 4 other states coming out at 9 AM, so we'll look to get this briefing wrapped up before then. Because are those other states going to follow a similar weak inflation number that we've had from Saxony, and potentially then do we get a further extension of the moves we've already seen this morning? Again, the biggest weighted contributors to German national CPI being North Rhine-Westphalia and Baden-Württemberg, just as a guideline. Just taking a quick look though, and a recap of what happened last night, because the S&P did finish down 0.67%. Now that might not sound like a lot, but the S&P, I think I'm right in saying, hasn't finished down more than 0.6% in 99 trading days. And so actually this is quite a sizable sell-off that we had yesterday, the worst in fact since September. So as you can see here, the selling overnight in Asia really has continued. Generally, what happened yesterday was, I think, a byproduct of a couple of things rather than one specific catalyst, because you can see here when we got up to the initial highest all-time high levels at kind of the 2880 mark in the S&P. A little bit of profit taking coming into month end, of course, maybe people just closing out some positions. Then you've also had Apple, which is a large market cap stock which underperformed yesterday, did weigh on sentiment generally because they've toned down their orders for the iPhone 10 going forward. That was in the Nikkei press. And this obviously comes ahead of their corporate earnings when they get later this week. So I think there was a combination of a few things that led to this sell-off, and basically where we finished in Wall Street being one of the biggest sell-offs we've had. So if I just kind of section off the US session here, obviously Asia wakes up and they evaluate what has happened, and they kind of carry the baton from sentiment from what was the lowest multi-month close we've seen in US indices in a while. And so then Asia takes it another leg lower, and consequently hence the DAX, the Euro Stoxx futures in Europe also gap down. But as I said, they've already really closed and gap filled given the fact that that inflation print was so weak this morning. But hopefully that explains a little bit about the weakness. Now, other things that have happened obviously is Treasury yields. So if we swap over to this now, obviously what we're starting to see is the US 10-year yield continuing to climb and having jumped above that 2.6% reading, which is around the highest since April of, well, I guess going back to the beginning of 2017. We are now matching levels that we haven't traded in a US 10-year yield since April of 2014. Now for the 10-year Bund, that yield its highest now since September 2015. And yesterday I actually saw the VIX up 25%, and its highest close since August, 13.84. So as a reference point for the newer guys, what was typically seen as the tipping point for the VIX, the kind of psychological level during post-financial crisis era, was 20. So we're a long way off that at the moment, but we haven't been up at those levels for quite some time. But again, we're up at levels we haven't seen in several months in terms of the height of volatility, which certainly does, bring about some good trade opportunities for you guys, considering how low volatility it was at the end of last year. And certainly I don't think that this equity sell-off should come as a great deal of surprise, just given the context of the aggressiveness of the run higher that we've had since the beginning of the year. It's not that unplausible to have a bit of a mild correction, and then to throw in the mix, negative Apple headlines and so on, just to help the move. Do I think that this is the end of the kind of bull run? Well, no, not longer term, I don't think so. Some of the other things then, to look at this yield movement, a couple of highlights on why this potentially could be happening now. Well, for one, you've had a weaker dollar. Weaker dollar should technically then pushing up the price of goods in respect to then fitting in step with the expectation that inflationary conditions should start to pick up as we go through this year. If you look at oil prices, although we're negative about just shy of $1 this morning, we are still sharply higher from where we were just a few months ago, and we're still trading around a 64 handle at the moment. You've also got then the reduction of QE being talked about, certainly in Europe, but also a few operational tweaks ongoing in Japan, and you've got this quantitative tightening ongoing in the US, and then also you've got this large degree of surplus kind of supply coming to the market in terms of treasuries, given the aggressiveness of the plans from Donald Trump about infrastructure spending. This has got to be financed somehow, and it comes through the issuance of more debt. And that oversupplies the market then, which puts pressure on bond prices, and consequently the yield rises. So, quite a few reasons why this is happening at the moment, and it certainly has taken a bit of time for it to take hold, but now we are starting to see it make some real headway. A few other things though to be aware of, and then I know Sam's going to look at the charts in a little bit more detail. But this was a headline that the FT are running on their front page this morning. If you remember, this time yesterday I was giving a review of the weekend press, and it was talking about how a lot of the Brexiteers amongst the Conservative Party were putting pressure, potential no confidence vote in Theresa May, saying that she should fire people like Chancellor Philip Hammond because he's too soft on the Brexit process, because he keeps talking down the economy and wants single market access and EU customs union and so on. Well, very very good timing, it seems almost too good. Then the FT has done a leak via information sourced by, I think it was BuzzFeed, that basically a secret data report that has come out to show that Britain would be worse off under all Brexit scenarios. So cabinet ministers are being privately briefed this week on updated economic analysis of Brexit and its results, closely guarded in Whitehall, which of course then would strengthen the hand of soft Brexiteers like Philip Hammond. So again, almost too convenient here. I'm sure Hammond's had done what's needed to be done in order to have information leaked to the press to save his own position. It almost seems, reading between the lines. In terms of statistics, what it is that this document looks for, well, it suggests that a no-deal scenario would see the UK revert to World Trade Organization rules, would reduce growth in the UK by 8% over the next 15 years. It says that under a comprehensive free trade agreement with the EU and UK, growth would be 5% lower over the same period compared with the current forecast. And then the softest Brexit option, a Norwegian-style single market access through membership of the European Economic Area, well, growth would still be 2% lower. So all three would be lower. So although this is a negative story, and the pound is down this morning, I would say that this story really has very little to do with it. I think that the fact that the data, now that they've done thorough analysis about Britain's position post-Brexit, I think it's a no-brainer that the economy is going to be worse off. And so it's not exactly breaking new ground here. So I don't think that's what's weighing on this cable pair this morning. I think this is more a situation of a stronger recovering dollar. We had a stronger dollar yesterday, and that's the same case. We've already seen dollar strength again this morning, so consequently both pairs are a little lower. The Dixie currently up about 0.2%. Talking of the dollar, of course, today is the State of Union address from US President Donald Trump. So what are we looking for? Well, for one, his speech, London time, is not going to happen until 2 a.m. this morning. So you're not going to get it during the session. It's going to be something that we're going to have to reflect upon when we come in tomorrow morning as to what exactly he has said. I don't actually, my view on this is that it's not really going to be too groundbreaking. This is going to be more Trump massaging his own ego, I would think, more than anything else. So I'd be expecting him to talk about corporate tax cuts and how from an individual man on the street level in America, how that's helped them in terms of their pensions and so forth. He's likely to talk about, well, these are a couple of the other things. He'll talk about trade, fair and reciprocal trade. This is his repeating message that he said many, many times. This is ongoing, obviously, with NAFTA talks, which they're in their 6th round at the moment. He'll probably talk about trying to push the sell on the immigration plan. That's been the kind of block, if you like, to recent spending plans that we had. This short-term stopgap bill funding till the 8th of February. Foreign policy will definitely get a mention. This is kind of what really cajoles his following in the States, it almost seems. So I'd expect some phrasing about the Rocket Man and how North Korea, if you step over the line, will sort you out. That kind of messaging, I'm sure, will be strong. But yeah, this is the kind of the bottom line. Does the State of Union really matter? Because history would tell us that generally politicians say a lot in this speech, but not a great deal actually ends up getting delivered. So it's a little bit more PR than anything, but of course there's always a risk when Trump talks. You know, who knows what he could say. I mean, he's been a little bit more in check, I would say, if you've got Davos last week to go by. But definitely something which we'll be looking at this time tomorrow. Okay, quick look at the calendar, and I'll hand you over to Sam. German state CPIs, as I said, you're going to get a batch here coming out at 9 o'clock, so this should really cement then the overall pan-German inflationary condition. And so far from Saxony, that has painted to be weaker, and hence the move that you've seen from 8 o'clock. Going forward, get some mortgage lending and approval updates out of the UK. Not really much of a factor in moving the pound, though, I'd say, in this terms of data. Still, I would be looking for the dollar to really dictate the price action. Flash preliminary GDP for the Eurozone at 10 o'clock, maybe worth keeping an eye on. These sentiment figures, again, lower ranking in terms of potential to move the market. Going further into the day, the pan-German national CPI, this is really non-market moving, because by that time, obviously, we've seen all the individual states, so we'll already know. And then looking forward, API crude oil inventories will be later on this evening. You do have Mark Carney speaking today, but this is just a House of Lords Economic Affairs Committee hearing, so very seldom does he really break the mould. It's just really an update to the politicians of the current state of play from the central banking point of view. And as I said, Donald Trump's speech doesn't actually take place until 2 a.m. our time. And as Bill in the chat just mentioning here quite rightly, one of the key things I'm sure he'll be talking about is the infrastructure bill. Obviously, we've had rumours that it could top 1.7 trillion, even though the administration's kind of saying $1 trillion. But obviously, this is his next big sentiment booster, if you like, to try and bolster the US economy. And so I'm sure that'll be a main feature of his speech. Okay, guys, have a good day. Hand you over to Sam, and he's going to look at some of the charts. Thanks very much.
Yep, hi guys, let's have a quick run through of the charts as we see them at the moment. I think it could be quite an interesting day. It's set up quite nicely, especially in the equity markets, which we'll come through just in a bit. But starting off here with, well, we've got euro dollar here, which is still seen last couple of days into, really since the Trump comment. I know we had a bit of a pullback that Friday morning, but the dollar strength has started to come back in, already up, you know, nearly 0.2% for the day. I'll be interested to see if the S1 breaks, so lower. And I think it's a case when you've had a trend, quite a clear trend for a while, and you start to see a bit of a pullback, it can become quite tricky in terms of well, you still believe that trend is in, so you just buy at every opportunity, or if it's a downtrend, selling at every opportunity. So I think for some of these markets, especially for the newer guys, I think the best thing to do is sort of, you know, if for example it goes down to S1 again, you're only really interested in perhaps if it breaks, and then, you know, not risking too much on the sort of the classic short to go in, rather than, you know, buying presuming that the dollar's still going to be weak. I think if you, for the uptrend that, you know, we clearly have been in, you can see here, if you want to continue that, you know, really this market's going to have to get above the pivot and yesterday evening's sort of high. If, you know, if we got to where this circle is now, the buyers technically are in control, and then really to get back up there, the sentiment has changed, and we can push on from that point of view. Whereas if we break the low, you know, the sellers are in control. I think in between what is today's S1 and the pivot is kind of an area you don't necessarily want to be involved in unless it's data or comments or whatnot. So I would you know, tread carefully for those who aren't already in a trade or looking to get in one. Just go, well, when you do look to get into the trade, just think what are the majority of the market going to be doing. So from my point of view, I think I only want to see a break of the lows or a push higher to sort of maybe perhaps look to continue the trend that we're in. Pound under a lot more pressure this morning than euro was. A bit of negative sentiment and comments out regarding Brexit. We can see it's actually been quite nice and technical here. We have pushed lower. The classic worked quite well, and again just now on what was the previous low of the day. So I'd be a bit wary if we do come back to those levels, having seen the trade already work. But again, it's a case of you know, looking to follow the sentiment for the day or the recent trend of the last few. I think in terms of areas below, you've got 140 on the futures not far away, and the low of the afternoon of the 23rd to be aware of. In terms of the upside, if you were wanting to get in to continue the overall trend of the last few weeks and months, then you know, a considerable break higher. I think really maybe a technical push above here, and then you've got, you know, small targets to the upside. I think you don't want to be holding these trades for too long. So for now, I'd be looking to continue the recent trend when perhaps the sellers come in. And again, quick look over the other currencies. Aussie dollar come under a bit of pressure as well as this dollar starts to strengthen up a bit. Again, looks a bit choppy. We've seen a little bounce recently. This is quite an interesting area though, but again, it's already worked once this morning, so there were some decent opportunities early on in the morning on these sort of classic shorts of the break and the pullback, but I would just be wary if it comes back to these areas, having seen it already work. Dollar yen, so we'll just flip the chart the other way around. Nice sort of range that we're in at the moment, just over the last couple of days, using these lows here and the highs. Could play the range. Pivot, I would say, is, you know, it's an area you probably want to stay away with. If you just draw a line, or I'll just draw some circles every time we've been around what is the pivot today, it's been quite unpredictable. So probably an area I'd say best to stay away unless you really do get some momentum through there and you're looking for an entry point to get in. We'll have a quick look over at the DAX, which has, well, I mean, almost filled the complete gap, but we found a bit of resistance on what was one of the lows from yesterday. It'd be interesting to see if we can push through there, or if this is the top and we start to drift back lower. Again, it's from a technical point of view. If your bias is to the upside today, if we push above the lowest point of last night, then you can get you know, a bit of buying pressure into the pivot and go from there. But obviously, if it drifts back lower, points of entry to get in, we just lower the time frame down. If we were to push below today's S1, it opens the door back to these levels and so on. So I think it's very much a day when you have sort of trends turning, is just to be a bit more safe and trade with the majority of the market. Equities, I saw Philip comment in the chart earlier, so obviously I'll give it a bit of focus now and throughout the day. Obviously, every time equities do come down and make a, you know, significant down day, to circle a couple here, you can see it takes, well, it doesn't, I should take too long for the buyers to come back in and drive price higher. Can that happen again? I mean, in terms of the S&P here, if we just draw up that low, you can see how good it was. Usually, you know, it doesn't happen. What I'm trying to say is it will come back down to test near those lows before pushing higher again. That's, you know, not out of the question. But in terms of if your bias is still to the upside, let me just draw a really key resistance level here for the S&P. If we were to, you know, considerably push above sort of the highs we've made this morning, which was the low very early on, then you've got a bit of room to the upside to go from that point of view. But I think when you've had such a, you know, in these terms, these markets at the moment, a half decent sell-off, it would be a case again of only really getting involved when you can see the majority of the market are also interested. And for me at the moment, if we can push above here, let me just get the rectangle out, that would interest me in terms of getting to that point there in the market. The Nasdaq at the beginning of this briefing, yeah, was just on the S1 and it's just held again there, so you can see quite an important level in terms of other interesting areas in the market for the Nasdaq. If we were to push on, have to be aware of this area here. Personally, I do think we'll drift higher today, but again, I'm only interested if we do get above these resistance points, and I'm not going to be entering the market too aggressively. I know quite a few people trade the Dow, so let's have a quick look over that as well. And you can see similar point in the market. I'm just going to draw this up near the S1. So this is quite an important area in terms of a key resistance point. You can see that low early in the morning. In fact, I was saying to Charlie in the office here yesterday, and it was about this sort of time, 4:30. I was saying to him, if we can push above this sort of area in the pivot, I think we'll go on and make all-time highs again very quickly. And you can see just how strongly that pivot held. So just be careful of US equities. If you get a similar sort of pattern, and it's happened quite a few times where it really just struggles to push higher, you can see again here, then you do start to drift down and the sellers do take over on a break of the low. So, you know, it'd be a case of let the market tell you what's going on today, rather than trying to beat it. You know, go in buying just under resistance, thinking you've got that hero trade in you, or selling just before the low of the day breaks. I would play it safe and only get in once these levels are broken to the up or downside. Would be my advice. Let's have a quick look over at gold and oil just to wrap things up for the commodities. We're just having a bit of a bounce here from S1, which has held very well. Levels to the upside. What was the low of the day? We had a nice pullback, so that's quite a big level to be aware of in terms of the gold market. Oil, similar kind of thing, just having a bit of a bounce here as the dollar just comes under. No, the dollar's not really doing too much actually. But oil here, I'll just move this higher. What was the low? Near yesterday's low as well. Ooh, big intraday level to see if this can hold or break. And obviously to the upside, we can start pushing on again. So oil and gold did come under a bit of pressure yesterday with the sort of stronger dollar that we've seen. Oil, in terms of levels below, if we were to carry on pushing, you've got the lows that we saw from the 24th last week, but rather tricky market to be holding a position on for a couple of days or whatnot in what has been a clear uptrend as well. So things to sort of be aware of going into the day. Also, you've got data coming out, but whether the dollar is going to strengthen, whether equities can carry on to push higher as well, is something I would definitely be aware of here. Nasdaq, I think S1 and the previous lows of yesterday will hold the key to whether we can push higher. Yeah. So Gav saying Nasdaq found support at the trend line mentioned yesterday, and I would definitely be looking to get these trend lines on. They do really, you find they're respected well, and also when they break and come back, they act as support or resistance, whichever way. Obviously, any questions, feel free to put them in the chat. We'll be talking over the mic as usual, and have a proper catch up around midday as well. But if I don't speak to you, have a good day, and I'll catch you in the chat.